This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Blue chip bonds. Verizon sells a boatload of bonds, the largest corporate debt issue ever. But as the big money piles in, should you follow?
Cooling off, applications for home loans plummet, refinancing activity falls. Are rising mortgage rates throwing cold water on housing's hot run? And what happens next?
And the great divide, the income gap between America's rich and poor, is the widest since the Great Depression and growing. What triggered the spike and what can be done about it? All that and more tonight on Nightly Business Report for Wednesday, September 11th.
Good evening, everyone. Well, the Dow has done it again. This makes 3 days in a row of triple-digit gains for the blue chip average. The S&P is up 7 straight days, its longest winning streak since July. Here are the closing numbers. The Dow soared 135 points, the Nasdaq was down 4, and the S&P added 5 points. Over in the bond market, U.S. Treasury bonds rallied after an auction on the benchmark 10-year note attracted the highest demand in 6 months. $21 billion worth were sold at a yield of 2.94%. That's the highest Uncle Sam has paid in 2 years.
But, Susie, that Treasury auction paled, actually, in comparison to Verizon's history-making corporate bond offering today. That's the biggest ever on Wall Street. The telecom giant sold a staggering $49 billion worth of bonds today, and incredibly, that was only about half of what investors were willing to buy. It will use the proceeds to help finance its purchase of Vodafone's 45% stake in those two companies' Verizon Wireless joint venture. David Faber joins us now with more on the massive side of this bond sale, and you've been following this deal for months, really. What does this say, and why is it so important? What does it say about Verizon? What does it say about the bond market? Why are so many people paying so much attention?
You know, there's been insatiable demand, it would seem, for bonds from good corporate borrowers, that, of course, being the likes of a Verizon for quite some time. In fact, it's been one of the underlying stories, not just of the bond market, but of the equity markets, the stock market as well. We've seen so many corporations issue bonds, being well received, being able to get interest rates that historically we've never seen anything like them. Even with the move up in rates in the last 5 months, they've used a lot of that money to buy back stock. That in turn has helped the stock market. In this case, Verizon, as you say, using the money to help buy out the 45% of Verizon Wireless they don't own. But it's incredible, that $49 billion number. We've never seen a number that large in one day. So many of the viewers who may be investing in bond funds, for example, those are the guys stepping up and saying, I want some of that. Please bring it on. I need as much as I can get. You
said a lot of blue chip corporate borrowers have been going to the market. And we saw just a few months ago that Apple did that, went and did an offering. But it was a lot less than what Verizon's offering. There have been a lot of comparisons about Verizon and Apple. Verizon offering a 5.2% bigger premium than Apple, 2.4%. Why all the differences?
Yeah, I mean, Verizon offered across the spectrum. So they went from as little as, I believe, 3 years right up to 30 years, Susie. So they really hit all sorts of durations. Apple, of course, borrowed at the low. It was in May, I believe, when the 10-year bond was yielding 1.6%. It was the best time to issue in the history of issuance ever. We're up, of course, over 100 basis points since then on the 10-year Treasury yield. Hence, you borrow at a spread to that. Verizon is a great credit, but not quite as good as Apple, which had enormous sums in the bank. The problem for them is much of that money was overseas, so they decided to borrow here to fund a buyback.
Verizon is going to pay something like $130 billion to buy out that 45%.
That's
is
correct.
That right? So where does the rest of the money come from?
They're using stock. They're using their own stock to purchase the remainder of it. So they will issue Verizon shares to Vodafone shareholders, and Vodafone itself will also take in this roughly, let's call it $60 billion. They've sold much of that debt in cash. So it's $60 billion in cash and roughly the same, a little bit more in stock. That's the consideration for what, by the way, is the third largest deal of all time. So we've got the third largest deal and the largest corporate bond offering we've ever seen.
Real quick question. Any risks here? Any chance that this Vodafone Verizon deal doesn't go through? And then what would that mean for you as an investor if you bought these bonds?
You've got nothing to worry about if you're an investor. However, the risk of this deal not happening are extremely low. because Verizon already controlled Verizon Wireless. So in this case, when the FCC or the DOJ were to weigh in, there's no change in control. In fact, they may even view it more positively because you don't have a foreign buyer any longer owning a U.S. telecommunications provider.
David, thanks. Great to have you with us.
My pleasure.
David Faber.
Our next guest says the Verizon bonds look great today, but might not be the best opportunity a year from now. She's Kathleen Gaffney, portfolio manager of the Eaton Vance Bond Fund. Kathleen, thanks for joining us. You just heard us talking with David Faber, who's saying that all the smart money is flowing into this Verizon bond. Tell us why you think investors shouldn't follow suit.
It was a very hot deal and very much in demand. And I think it speaks to there's an appetite for yield, for looking for sources of income. But if you think about where rates are headed over the next, say, 3 to 5 years, do you want to hold on to a bond that's yielding 5.20 today if treasuries are also going to be yielding 5% 3 years from now?
All right, so I've got to ask the question, Kathleen. Did you go in and buy some of these bonds today?
I'm an investor that really takes a long-term view. So again, I've got a longer time horizon, and I think there are better sources of income and total return out there in the marketplace today.
So like what? What are you saying? And also, so you are a long-term investor. You still get your 5%, going back to your first point, you still get your 5% at the end of the, when that bond comes due, right? You didn't lose any money.
Right, but the point is, if you hold it to maturity, which is 10 years from now, talking about the 10-year bond, they did, as David mentioned, have many different offerings, but I'm talking about the 10-year. So you've got to hold on to it for 10 years to realize that 5%, 5.20% annual return. Now, interest rates are going to be who knows where 10 years from now. They could be at 8%. They could be at 10. And you might not be so happy to have that 5.2% bond. The question really is, as David pointed out, is Verizon a good credit, and are you getting paid for that risk today as well as a year from now?
Do you think Verizon is a good credit? In other words, another way to put it is, if I'm comfortable with the idea of getting 5.2% as a benchmark yield over the next 10 years, and I'm comfortable with the idea that I'm going to hold that bond for that whole time, would that be something that you could counsel someone to do?
Well, I'm a bond manager, and I'm looking at all the opportunities. I would ask whether you want to hold that bond for 10 years, and if you're going to hold it and go to sleep and not worry about it at all, sure, it's not a bad investment today. I can't tell you what Verizon is going to do, what the industry fundamentals are going to do over 10 years. There's a lot changing in technology that may potentially change that credit risk. And so you might actually demand more than a premium that yields 5.20 in the current market. You might demand a lot more 3 years or 5 years out.
Kathleen, real quick question. We don't have much time left. So interest rates are going up. Are bonds a good investment overall? Forget about the Verizon thing for a moment.
High-quality bonds and treasuries have a lot of interest rate risk right now, which should be a concern for investors. Fixed income and looking for other sources of income is available in other sectors, such as floating rate, high yield, convertible bonds, and other non-U.S. issuers that offer good yield advantage right now.
Okay, fair enough. Thank you so much, Kathleen. Kathleen Gaffney, portfolio manager of the Eaton Vance Bond Fund.
And now to one of the other big stories of the day. Apple looks like a lot of investors and a handful of analysts soured on that stock today, which recorded its worst one-day decline since April, falling 5.5% and closing well below $500, as you see right there. Now, the reason, no wow factor over the new iPhones or the operating system unveiled yesterday, along with concerns that the plastic-backed iPhone 5C is still too costly for emerging markets like China. And just today, an expected deal with China Mobile to begin selling the iPhone in China didn't happen. Also feeling the bite from Apple today, some of its suppliers like chip makers like Qualcomm, Avago Technology, Cirrus Logic, and Skyworks all got a significant amount of their revenue from Apple, and all were lower today.
Well, Tyler, a completely different story at Facebook today. Shares of the social networking giant hit an all-time high today. This comes 15 months after its initial public stock offering. The stock closed at $45.04, a gain of more than 3%. Some analysts say the boost was sparked by speculation over Chief Operating Officer Sheryl Sandberg's visit this week to China that could lead to an expansion into the biggest market in the world.
Well, you know, we throw around the word disruptor a lot when we talk about certain companies, especially in technology. One of the biggest conferences that deals with these tech disruptors is going on right now. So what does it mean to be a disruptor, and why should investors care? Julia Borston tells us.
A disruptor is a company that innovates with technology to challenge established companies and business models. Two of the biggest disruptors, Facebook changing advertising and Netflix transforming the entertainment business, are thriving, trading at all-time highs. Facebook CEO Mark Zuckerberg and Yahoo CEO Marissa Mayer taking the stage here at the TechCrunch Disrupt conference, as about 3,000 entrepreneurs and investors flocked to the event and hope to follow in their footsteps.
This is an extraordinary event. I liken it to the Olympics for some of the best technical athletes in the world. The community that comes to Disrupt is the best of investors, influencers, and certainly entrepreneurs.
To hear leaders of the most powerful internet companies reveal their next steps, and to hear from pre-IPO companies, Twitter, Box, and Dropbox, facing questions about their IPO plans.
We don't really have a timeline for it. We are really still focused just on building our markets. Doing things like moving into the enterprise is a big focus for us now.
With those established companies setting the gold standard, the question is how a slew of new startups presenting and competing here are disrupting or shaking up established industries. Like Curator, launching a company like Pinterest for art, planning to eventually launch a new art market.
Every year people around the world spend over $12 billion on art below 50K, so that's kind of our market.
Tackling the $500 billion men's retail market, Branded connects men who hate to shop with people who love to become their personal shoppers.
I know the pain that men have when they go shopping, and I have that pain too, and there's nothing online at the moment. There's no market leader in men's commerce. There just isn't one. Everyone that's tried it always goes for this fashionista customer, but the majority of men are not fashionistas.
There's even Monsieur's $1,000 robot that mixes cocktails for bottle service at clubs and VIP sports lounges. Now we'll see how it shakes up the bar business. For Nightly Business Report, I'm Julia Borston in San Francisco.
We turn now to our Market Focus segment, and we begin with a company that shook up the video industry, Netflix. It's launching its streaming service in the Netherlands. Netflix now operates in 41 countries and has more than 37 million customers around the world. But after a big run, one Wall Street firm decided it was time to downgrade the stock to neutral, and that pressured shares, dropping more than 1% to $308.30. But Netflix, still the best performing stock in the S&P 500 this year. It's up 230%. General Motors will soon lose a big shareholder, the U.S. government. The Treasury Department said in its August report to Congress that it sold over $800 million worth of GM common stock last month, but it did not disclose the price per share. That will be revealed at a later date. All in all, though, taxpayers are still in the hole for more than $14 billion. Today, GM shares fell almost 2% to $36.35.
Restoration Hardware got hammered today after reporting a loss in the second quarter. The home goods retailer is linking the loss to stock awards given to its chairman and CEO. The company is planning to close some mall stores in favor of fewer, bigger showrooms. Shares fell more than 11% to $67.04. Well, feeling the sting of the digital world, International Paper. The company is shutting down a paper mill in Cortland, Alabama early next year. 1,100 workers will lose their jobs there. International Paper says more consumers are using email and other alternatives, reducing demand for its paper products. Now, the company made a separate statement last night announcing a $1.5 billion stock buyback plan and a 17% boost to its quarterly dividend. Shares of IP closed fractionally higher, 49.36, the finish there. And Merck is licensing its experimental cancer drug to AstraZeneca for an upfront fee of $50 million. The deal is going to help AstraZeneca build its pipeline, and Merck will be eligible to receive future payments related to regulatory milestones. Now, the drug is being tested to treat certain types of ovarian cancer. AstraZeneca rose almost 2%, closing at $50.51. Merck up fractionally to $48.14.
Still ahead, the income gap between the wealthy and the poor is now the biggest in a century. Why is that? And what does it mean for the economy? That's coming up. But first, a look at how the international markets closed today.
Well, yesterday we told you about the changes coming to the Dow Jones Industrial Average. Tonight, it's the S&P 500. After the close of trading on September 20th, Advanced Micro Devices and the defense contractor SAIC are out. They're going to be replaced by Vertex Pharmaceuticals and the electronics instruments maker Amatec. Advanced Micro and SAIC will move into the S&P Midcap Index. Well, a bit of a caution light in the housing market today. Americans aren't applying for home loans the way they did earlier this year. Mortgage applications tumbled last week, falling 13.5%, with refinancings plummeting 20% as interest rates rose slightly higher.
Meanwhile, the slowdown in new mortgage requests means a lot of bankers are losing their jobs. Citigroup announced today that it's closing a Danville, Illinois office dedicated to mortgage refinancings. 120 employees will lose their jobs there. And JP Morgan has laid off more than 2,000 workers just since August. Those cutbacks are part of a long-term paring back of its mortgage origination unit that'll ultimately let go 15,000 workers by the end of next year.
Well, joining us to talk more about the housing market is Anthony Chan. He's chief economist at Chase Private Client. Welcome back, Anthony. Good to have you with us. So we got rising rates. We've got layoffs in the housing departments of many banks, including JP Morgan Chase. And we've also got a fall off in mortgage loan applications, a significant one. Are the best days in this housing market's run behind it?
I really don't think so, Tyler. I think the housing market will continue its recovery. It still has a ways to go. Remember that at this point, prices, when you look at Case-Shiller, one of the most accurate ways of measuring housing prices, are still down about 23% from the peak in May of 2006. So I think that given all the pent-up demand that's certainly built up over the last couple of years, housing still has a ways to go.
But, you know, prices overall have been rising, maybe not from, 2008 levels. Interest rates are going up. The only thing not going up are people's wages. Do you think that it's getting to the point that people are being priced out of the housing market?
I think you're going to see some of that, and it's unrealistic to expect that the trends in housing won't slow down a little bit because mortgage rates are picking up, and some people, of course, will get priced out of the market. And initially, when interest rates rise, what you see is a lot of people that are on the fence just jump off the fence and start buying houses before rates go up significantly. And now as rates have been going up, and they've gone up over 100 basis points, you will see a little bit of a slowdown, but not a collapse in housing market growth.
So what I'm hearing you say, Anthony, is that perhaps those price rises that have been averaging 12 and 13%, according to Case-Shiller year over year in many markets, that those price rises are likely to slow but not disappear and certainly not turn into declines. Have I got you right?
Absolutely. 12%, 13%, those kind of growth rates are unsustainable. And in fact, they bounce back because prices drop so sharply. But we probably will move into a phase over the next couple of years where prices will probably be going up somewhere in the neighborhood of 4 to 6 or 7% on a year-over-year basis. And by the way, that's healthy because that will prevent another bubble from brewing anytime soon.
Anthony, most people are expecting for the Federal Reserve policymakers to begin tapering back on their stimulus plans at their meeting next week. There's also, we see mortgage rates going up. You put all of this together, is the economy going to really start slowing down a bit here?
I think that the tapering is going to occur precisely because the economy is actually showing some acceleration. The Federal Reserve is not tapering or cutting back on the asset purchases because they're worried about inflation and they're trying to slow down the economy, but rather they are reacting to the fact that the economy next year will probably grow a lot faster than this year. So does that in itself take some of the air out of the balloon? Of course. It will slow down the economy, but there are many other moving parts out there that I think will push the overall economy to grow somewhere in the neighborhood of 2.75% or as much as 3% over the next year or so. Things are getting better.
Anthony, we'll leave it on that very positive note. Anthony Chan, chief economist at Chase Private Client.
A troubling assessment, though, of the nation's first state. Moody's Analytics, which tracks state and municipal economies, says that every state in the country is currently out from the risk of falling back into a recession, except for Delaware. Why is that? Well, it hasn't seen a big return in jobs or benefited from the growing energy industry.
Well, while most states have recovered from the Great Recession, as Susie just told you, a lot of Americans have not. New figures from the IRS show that the income gap between the richest and the rest of the country widened to a new record last year. Hampton Pearson has more now on the nation's growing income inequality.
The wealthiest Americans have enjoyed quite a comeback from the 2008 recession. According to a new study, the richest 1% of Americans are now collecting their biggest share of household income since the Roaring '20s. Economists analyzing Internal Revenue Service data found the top 1% of American households, those with pre-tax income above $394,000, earned 19% of the country's total household income last year. And the top 10%, with household income exceeding $114,000, captured a record 48.2%. Progressive economists say it's setbacks for the Main Street economy that are increasing the income gap.
We've had declining unionization. We've had erosion of the minimum wage. We've had increasing trade. We've had a Federal Reserve that prioritizes low inflation over low unemployment. And we've had all sorts of policies, financial deregulation. Policies that have really rigged the economy in favor of the top 1% at the expense of the bottom 90%.
But the authors of the study point out incomes fell 3 times farther for wealthy Americans than average households during the financial crisis, and pro-growth advocates say taxing the rich or income redistribution are not the answer.
What we do support is creating the conditions that allow those lower people on the ladder to move up. Reducing taxes, reducing regulations, allowing companies to hire more people.
The report also says it was tax policy here in Washington that caused the spike. Wealthy Americans cashing in dividends in 2012 to avoid higher taxes this year. For Nightly Business Report, I'm Hampton Pearson.
Coming up, Wall Street remembers the tragedy that happened on this day 12 years ago.
Americans everywhere marked today the 12th anniversary of the September 11th terrorist attacks. In Washington, President Obama, Vice President Biden, and their wives commemorated the day with a moment of silence on the White House lawn at 8:46 this morning. That's the exact time the first plane struck New York City's World Trade Center in 2001. In addition to the sites of the attacks in New York, Washington, and Pennsylvania, moments of silence were held in the business world, including the New York Stock Exchange, Chicago, and New York Mercantile Exchanges.
Well, 12 years ago, Cantor Fitzgerald teetered on the brink of extinction. A majority, more than 600 of its employees killed in the 9/11 attacks. It survived thanks in part to the generosity of other firms. Now, at its annual Charity Day, the firm honors the memory of those who perished, bringing in a galaxy of stars to brighten a somber day and help Cantor give back. Mary Thompson has our story.
I'm pretty good. How are you doing? What are you doing right now?
Cantor Fitzgerald's Charity Day turns tears into laughter.
Or I could be Mike Tyson, heavyweight boxing champion, I need the money. Or I could be Bill Cosby, I'm going to give Jell-O pudding to everybody if we raise the money. Or I'm going to be President of the United States if there's any indication. Yes, we can raise money.
Bringing stars like actor Jamie Foxx to light up what is an emotional day for the firm. Celebrities ranging from comedian Whoopi Goldberg to Olympians like soccer star Brandi Chastain and figure skater Sarah Hughes execute trades whose commissions go straight to charity.
Unfortunately, we know what pain is, and so we want to go out and reach out to people who are suffering in a way that we understand and show them love.
CEO Howard Lutnick's trading firm harmed more than any other on 9/11. 658 of its 960 employees died in the terrorist attacks. On this day, traders honored the former employees' memories by giving their commissions to a fund supporting victims' families and over 100 charities. Among the celebrities answering phones and taking trades, funny man Billy Crystal.
Come on, I'm on a hot streak. Don't take so long to decide. Just say yes. Yes, we're good. Okay. Boy, this is easy.
You want to sell?
And actress Julianne Moore.
Can you do a little better than that, Waldo? Come on, man. Jerry. $1 billion. Okay, love you.
Thanks, Waldo.
Former New York City Mayor Rudy Giuliani notes the event captures the complexity of the day.
Worst day, best day. You know, worst day, terrible evil, tremendous number of people losing their lives. On the other hand, tremendous courage, heroism. In this particular case, taking something bad and turning it into something good.
And it was a good day, according to Sean Matthews, who runs Cantor's broker-dealer.
We think we've at least met last year, which was a great year, $12 million. So our customers clearly participated with us, and we're very excited and happy.
Cantor giving back every year on a day it lost so much. In New York City, I'm Mary Thompson for Nightly Business Report.
$12 million, that is doing some good out of something bad.
And it's really turning a tragedy into something good, and that's the sort of the magic of reinvention that this country is.
They paid for
so
the
known
college education of a lot of kids by raising this money.
Anyhow, well,
that's Nightly Business Report for tonight. I'm Susie Guerra, but to learn more about the business story we covered tonight, join us online at nbr.com.
And thanks from me as well. I'm Tyler Matheson. Have a great evening, everybody, and we'll hope to see you back here tomorrow night.
Nightly Business Report has been brought to you by
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Guerra with a Nightly Business Report news brief. The Dow has done it again, racking up 3 days in a row of triple-digit gains while the S&P rose for the 7th straight day. The Dow soared 135 points, the Nasdaq was down 4, and the S&P added 5 points. The Nasdaq was stymied by shares of Apple, which fell more than 5%, as analysts and investors were not impressed by its lackluster lineup of new iPhones. Verizon raised a staggering $49 billion today in the biggest corporate bond auction ever. Applications for new mortgages tumbled last week on rising interest rates. Now some banks are cutting jobs in their loan units. And a new report says every state in the country is no longer at risk of falling back into a recession, except Delaware. Be sure to tune into Nightly Business Report right here on your public television station.